Peter Eliades with you, Monday, January 13, Stock Market Cycles Update. Yes, I know. It was very disappointing. Now, I guess you can gain some kind of appreciation as to how difficult it is to get a sign of the bear. First of all, it's very tough to get that 18 days in a row of that churning pattern. And then from there, you've got to break out to the downside. Two things went wrong today. We did not get the 18th day in a row, and we broke out to the upside. So that's the end, folks. You got to start from zero again. Very, very disappointing. Almost the same thing happened in November, but in November you broke to the upside after 15 days. And I mean, maybe that's bullish. I don't know, but it doesn't change any of the projections. The chart that we're looking at now is tortured me all day long because it shows in 5-minute increments what the ratio is of advances to declines on the New York Stock Exchange. This is the beginning of the day right here. Here's your beginning of the day with a ratio of advances to declines, 6:35 Pacific time, 9:35 Eastern. And we started out in pretty good shape, 136, 146, 139, 168. But then came 8:30 Pacific time, 11:30 Eastern time. And from that point on, it was above the 195. The 195, by the way, is this red line. So that red line delineates the 1.95 ratio we had to stay below. Looked like we started coming back down to it again, and we did indeed. We got down to a ratio of about 197. That was 10:30 in the morning Pacific, 1:30 Eastern, but we never got below 195 again. And that's it. Sorry, I can't do anything for you. Now, the inevitable question is, well, but what happens, Peter, after you get 17 days and then you get a breakout to the upside? Isn't that bearish too that you had the 17 days? Well, I know you're curious enough to know, so I'm going to show you what happens. It's only happened 7 times in the history of the last almost 100 years, where you had the 17-day consecutive between 0.65 and 195, and then you broke out to the upside with a day above 195. And I'll show those days to you. Now, the first one you're going to look at, and you're going to say, well, wait a minute, that's a pretty good signal. Here it is right here. This happened in January 2nd of 1953. We had 17 consecutive days of churning, and we broke out to the upside, and that was it. It was a pretty nice bottom. But then look what happened. I mean, if you go forward from there, you're looking at this occurring. Not a very good time to say as a beginning sign of the bear, the beginning of a bear market. So even the next one that happened was not a terrible signal. You had an immediate down move. This is December 26th of 67. You had an immediate down move, pretty nice move to the downside. But then you had a big move up, and you sideways, and you went all the way up. Actually, you did not top in that whole process until 1968. So that was up in here. We had a nice top in 68, but this was way too early. You know, this is almost a year too early. You didn't top till December of 68. The rest of them are really bad signals. And it's interesting that 1, 2, 3, 4 of them happened in the 90s. I'll go through them quickly with you here. Look for the red arrows. There is one of them right here. So, in fact, we might as well look at all 4 of them together. Those were the other times. 17 consecutive churning days, broken to the upside. Boo. December 17th of 92. Boo. 1995. Boo. 5395. Boo. 1128.95. And the only remaining one today. That's it. It's the only time since 1926-28 that happenstance has occurred. We have computers now. We can run those through quickly and say, when did this happen before? So don't think for a minute that the parameters that I set up back in the 90s for a sign of the bear can be played around with. I'm sure they can be played around with, but not in this fashion, especially when you break out to the upside. So there goes that. Now, this is interesting. We said last week that all upside projections had been met at least on a minimal basis. But we also showed you within the last week or two the difference between the closing price projection, nominal 40-week for the DJIA, and the intraday. The intraday is the one that we met, but let's take a look at the closing price projection for the Dow. It's an interesting chart. I know it looks very busy here. We can take these away for one moment and look a little less busy, but the minimum upside there is 29,108.28. We haven't got up there yet. The highest close so far has been a couple of days ago at 28,956. Not that far away, but we're not there yet. And here's what's interesting about the chart technically. If we go back to the low, and this is a parallel channel, but it's constructed on a closing price basis. You can do them either way, closing prices intraday. This one is closing prices, and you take the lows, the closing lows of June 3rd of 19, and the next anchor would be at August 14th of 19. So you use those, and then you go to the top in between them, which occurred on July 15th of 19, and look where we are. Let's zoom in on that because it's interesting. It really is. Look at this. We didn't quite get up to that line yet. January 2nd closed just underneath it. January 9th closed just underneath it. And now, what makes it interesting is, in a few days, that line gets right up into the territory of the projection. Let's move that down a little bit here. It's a big projection window, but you can reach that projection window by getting up to, I think we said it was 29,103, right in this area right here. And the upper parallel channel line meets that lower part of the projection around January 22nd. So, and that's all I've got to show you. It was such a disappointing day today, but you get what the market gives you. You can't make it give a sign of the bear, and it didn't. Will it give one before we reach this final top? There's no way of knowing. It has at most of the very important tops in the past, but it didn't give a signal in 2007, and that was one heck of a bear market. There were other things that gave signals, but not sign of the bear. So that's it for now. Disappointing day, I'm sure, for a lot of you who are looking for that signal to be triggered. It was not. In fact, just the opposite. We broke out to the upside. Thanks a lot for watching. If you haven't subscribed yet, subscribe lower right. We're going to follow this thing closely here because that doesn't mean that all hopes for a top have disappeared. They have not at all. We have this upper projection in terms of a closing price basis. We'll be looking for that. So we'll be following it closely. Thanks a lot for watching.